Hi, welcome to FinFolio-market Minutes. Today, I'm delighted to introduce Mr. Abhinav Sharma, the fund manager of Tata Asset Management. So he is managing three funds basically. One is large cap, one is infrastructure, and Tata Ethical Fund also. He has more than 20 years of experience in this fund management industry, and he know thoroughly what is happening in the market, which shares we will means like buy in these kind of market situations. So, sir, welcome to our show. Thank you very much to give an opportunity to discuss with you. Welcome, sir.
Thank you so much.
So, actually, today we are going to talk about the Tata Ethical Fund. So most of the investors are away from the market because of their principles, investment strategies, and all. So in this Tata Ethical Fund, we can say it has a Sharia-related investments. So, sir will explain about this Tata Ethical Fund. Sir, how it differentiate from normal equity funds and Sharia means like a Tata Ethical Fund. Basically, you're a fund manager of large cap, infrastructure, and also the Sharia Tata Ethical Fund also. So, how you differentiate this one with the other funds? Yeah.
Thanks for your questions. Tata Ethical Fund is different in the sense that it follows a Sharia investment style.
Okay.
So in that, the stocks or the companies which we buy, they are Sharia compliant companies.
Okay.
So we have our own advisor,
Okay.
a third party advisor who advises us
Okay.
on whether a company is Sharia compliant or not.
Okay.
And when they say that you can buy these companies, this is a set of companies which are Sharia compliant.
Okay.
From that only we make our investment universe or portfolio.
Okay, sir.
So it is different from say large cap or infrastructure where there is no such compliance, right? You can buy any other company,
Right.
depending on whether it is a large cap or whether it is for infrastructure segment. But here the difference is that it follows a Sharia investment philosophy.
All right, sir. So any body is there to scrutinize this one, sir?
Yes. So as I said, we have a third party advisor.
Okay.
Its name is TASIS, TASIS.
Okay.
And they are the ones who are responsible for giving us a set of companies every month.
Okay.
Which are compliant with the Sharia norms.
Okay.
And they have their own ways of determining whether a company is Sharia compliant or not.
Okay.
And it is based on their advice that we include a company in our portfolio.
Okay. So, like, I just want to add on about sir already told about that some restricted area is there. Say, like for the Sharia related investment, some restricted area is there, especially alcohol or tobacco or some other items. So, basically, they are avoiding these all stocks and investing into the selected stocks only. So, the sir straight away says that this one board is there to select which shares we can buy. So accordingly, the fund manager will buy that one. Correct, no, sir?
Yeah, no, you are right. So there is a set of compliance criteria which they have.
Okay.
So broadly, I can say that you mentioned about the companies which are into say alcohol or say, for example, cigarette business.
Yeah.
But even companies which are into interest earning businesses,
Yes.
They are also not qualified in this
banking also.
Investment universe. Yes. For example, banking.
Yes.
Even companies which are in financial risk taking.
Yes.
For example, insurance brokers, asset management companies.
Okay.
So nearly the whole of financial sector is excluded.
Oh.
And even a lot of food companies,
right?
Hotel companies,
Yes, sir.
They are also excluded.
Okay, sir.
So that is a business-based screening which they do.
Right.
But there is also another level of screening which is done at their end, which is based on financials of the company.
Okay.
So if a company is, for example, having leverage, which is debt,
Okay.
borrowings, so they have a certain set that if a company is having more than 25% of their assets
Right, sir.
in borrowings,
Okay.
then it is also disqualified.
Okay.
So there are also one or two more other criteria. Yes, it's quite strict, so you have to follow all of them, and then after that, the company is qualified. So just to give you a perspective, only around 40%
Okay.
of total market cap of India is qualified for our investment.
Oh, right, sir.
So
Understood.
nearly 60% we cannot invest.
Yeah, okay, understood.
So that is how these companies come.
Right, sir. So, like 1996 onwards, that fund is there. The Tata Sharia fund is already there. So from there, I can see that the average annualized return is around 15 to 16% is there. And sir, means like take over this fund. I think 2020
in September of 2020.
2021 or
Yes.
onwards. So you made a lot of changes, sir, in that fund. Means like basically that fund selections and all, shares and all.
Yeah, no. See, every fund manager will have its own style,
Yes.
but I will not say I made too many changes.
Okay.
And with time, you also have to change. So
Right.
it's not that I have changed based that I want to change,
Okay.
but you keep on changing portfolio, and that is true for any fund.
Understood.
It's not that I have changed for this,
Right.
and it will also change after me. Also, it will change.
Right.
Somebody will come and they will
take.
because every sector does sometimes one
Yes.
sector does well,
Yes.
sometimes other sector does well. So portfolio keeps on changing.
And also, sir, most of the people know that investors they are towards to the real estate business because of these restrictions of shares or whatever that what we already discussed about that Sharia compliance. So the most of the people are investing into the real estate. So how you compare this real estate with our equity investments?
See, I don't want to get into that discussion of
Okay.
real estate and equity.
Okay.
But what I will focus is on that everyone should have asset allocation.
Yes.
When I say asset allocation, you should say that not all your money should be invested in one asset class.
Yes.
So if you divide your asset classes into say real estate, then say gold, then equity,
Okay.
and then fixed deposits or fixed income. So these are the four broad asset classes.
Okay, sir.
So everybody should have investment across all of them.
Okay.
And I think how much percentage should one have will of course depend on somebody's comfort. But one should not ignore an asset class altogether.
Okay. Yes. You are saying that the asset allocation or the means like how much percentage you want to invest. That's according to the risk taking capacity of the investor.
Yes.
Correct, sir. Normally, what is happening here, no, sir? They are investing more into real estate for rent. So what I am seeing, approximately 3.5 to 4% return is there annually. So definitely in our Tata Ethical Fund, the track record is 15 to 16% average annualized return. So when we are comparing to the real estate return, it is 3.5% to 4% maximum I'm seeing. So it is huge difference is there, no?
I agree, but then it's up to an individual, right?
Yes.
How they want. Because all these facts are there.
Yes.
Returns is there. What you said is there.
Yeah.
But then some people may prefer something, somebody may not prefer something.
Yes.
But my only message is that one should have investment across asset classes. Not only one asset class, but across.
So, sir already told that we want to diversify our investments into different asset class according to the risk-taking capacity of the investors. What is our recommendation to our all clients or whoever is viewing this video? No, say bare minimum 20% of your asset you have to invest into the share market or equity market. Then you will get fixed deposit interest rate plus 5%. Definitely say like we can't give you an assured return, but definitely you will get inflation adjusted return. Definitely you will get. So that we can say. No, sir.
Yeah, no, you're right. So no one can promise any return.
Yes.
But again, I will say facts are there. And how return the markets have given over last 5, 10, 15, 20, 30 years. So one can take their own call.
Yes.
On how much they can get or how much is expected.
Yes.
But again, my only message again will be that rather than getting into what return one will get where, because that is difficult to forecast.
Right.
For example, precious metals.
Yes.
Right, so much return they have given in the last 1 year.
Yes, yes.
Now, will they keep on giving this kind of return every year? It's unlikely, right?
Unlikely.
But in every asset class, the returns come at some point of time, and you will not be able to predict when.
Yes.
So it is always important to have investment across
the
and don't try to time or don't try to expect that I will get this much return every year. That is not guaranteed other than the fixed deposits.
exactly, sir.
So based on an individual's risk appetite,
Right, sir.
they can differentiate or they can divide their savings into different asset classes.
Okay.
But you should have exposure across the asset class.
Exactly, sir. Yeah. The investors are chasing the return only. Actually, you can see now precious metals are giving last 2 years is giving good return. So everybody is chasing that return now. So, sir, already I told that all investment asset classes have their own cycles.
Yes.
Now the equity market last 1.5 years is not performed very well. So it's the best time to add more into equity investment. It will give you decent return over a long time. Short term there is no guarantee. Definitely long term you will get a inflation adjusted return. So we have discussed about this all about the Tata Ethical Fund and investment strategies and all. So like most of the investors have some doubts in their mind. So now the market is fluctuating. So everybody will ask one question, sir. So when market will rebound and what will be the return for another 1 year, 2 year, 3 year time frame? Can you explain?
Yeah, so I cannot comment on the return,
Okay.
but yes, the markets have been volatile in the last 1 year.
Yes.
And I will say that is not unexpected.
Okay.
And in 2024, market had a very strong run up.
Right.
In fact, after COVID only, we have seen markets giving great returns.
Okay.
And this is the normalization phase which is expected. Now, valuations were very high around a year back.
Okay.
And now they have corrected a little bit.
Right.
So even today, Nifty is trading at say 20 times
Right.
1 year forward price to earning, which is not cheap, and I will say it is still expensive.
Okay.
So going forward, the markets will have these volatile phases again.
Right.
I don't think we are completely out of the woods. We have to maybe catch up. The earnings have to catch up for the valuations to make sense. But the good news is that the earning growth is now coming back.
Yes.
Last 1 year, we have not seen any major or significant earnings growth.
Right.
But now earnings growth has started to pick up.
Right.
And as we move into say 2026 second half and 2027, I think the earnings will pick up.
Right.
And markets return will then be driven more by earnings growth.
Right.
And as we stand today, we are expecting around an 8% growth in EPS, Nifty EPS for FY26.
Okay.
And around a 17% growth in FY27, which is year ending March 27. Okay. So if that kind of growth comes, I am sure markets will give good returns. But yes, near term, there may be more some consolidation, correction, fluctuation, whatever you may say.
Okay. What about that foreign institutional investors, sir? They are continuously last so many trading days, continuously withdrawing from the market. Yes. So what is your core means like?
See, from a foreign investor perspective, for them, India is one of the markets. They can invest in other markets also. Okay. And especially a year back, the valuation differential between India and some of those other markets like China or some of them other emerging markets, okay, and even developed markets, okay, for example, like the US or Japan, for example, was very high. Okay. And given that earnings growth in India was not so strong, okay, so in foreign investors in their mind will think that why should you pay such high multiples for not the best in class earning growth. Okay. So that is why a combination of high valuation, cheap valuation elsewhere, okay, and low earning growth in India has combined for a foreign investor selling continuously for many months. And even today, as we stand now, the valuation differential between India and other emerging markets, okay, it is now back to the average levels. Okay, good. So to that extent, the valuation differential has corrected.
Correct.
But now the second step is that the earning growth has to pick up.
Okay.
And as I said, as we go into second half of 2026, earning growth expectations or earnings growth
Okay.
is expected to pick up.
Okay.
So once that happens, we may see a reversal, but let's see how it happens.
Okay.
But most important is that earning growth in India has to pick up.
Okay. Actually, Sir Abhinav sir is discussed about the market situations and everything to us. So thank you very much for your valuable time and insights, especially in this busy schedule. No, you've given some times to us. So thank you very much for your time, sir, and also the insights. Definitely, it will be beneficial for our investors. So thank you very much.
Thank you. Thank you so much for having me on.
Thank you.
Thank you.